There we go. Although overall economic activity edged down the first quarter, household spending, business fixed investments remain strong, very hawkish. The job gains have remained robust in recent months, and the unemployment rate has declined substantially. Again, the same thing as last time. Inflation remained elevated, reflecting supply and demand imbalances related to the pandemic, higher energy prices, and broader price pressure. That statement there is the same as last time. This is new. The invasion of Ukraine by Russia is causing tremendous humane and economic hardship. The implication to the US economy is highly uncertain. Innovations related to events are creating additional upward pressure on inflation and are likely to weigh on the economic activity. In addition to COVID-related lockdowns in China, that is new. Lockdowns in China are likely to be exacerbate supply chain supplies to communities highly attentive to inflation risk. That is also new. The committee sees to maximum employment, inflation rate above 2% over longer run. We appropriate a fine firming instance of monetary policy. Go back to 2%. In support of these goals, committee decided to raise the target range for federal funds rate to 3/4 to 1%, and anticipates that ongoing increases of target range will be appropriate. In addition, committee decides to begin reducing holdings of treasury securities and agency debt and agency mortgage-backed securities in June 1st. That is later than the market expected. They expected that to be mid-June. As described, plan on reducing the size of the Federal Reserve balance sheet. They were issued in conjunction with this statement. In assessing the appropriate stance of monetary policy, we'll continue to monitor implications of incoming information of economic outlook. Okay. The committee will be prepared for policy. That is interesting, people. That is very interesting. So there's a couple of new things in here that I have already pointed out. They're going to do it by June 1st. They're also doing QT, and QT was expected by market. We are seeing dollar falling at the moment. That is the first initial reaction here on the charts. Aussie dollar has a higher high. CAD yen has a mildly reaction. Euro yen has a mildly reaction. USD yen has a somewhere mildly reaction. We're going over to gold. We have gold going higher. We have oil going higher. I love gold, mates. Come on, mate. So for those who say you should do this, you should sell gold or buy gold, choose your own trading plan, people. Choose your own trading plan. There is nothing worse than selling the market now and taking the loss, and you come back. But somebody said it to me, you're not going to win any star today by selling gold or buying gold just because somebody else said it. Trade your plan your trade. If you didn't plan to trade gold before, there's nothing to do now. So, yeah, that is kind of the most important things right now. We are just waiting for now we are waiting for the press conference in 30 minutes. So we're going to watch through what the market is doing. We are going to look at DXY. Why is DXY falling? Does anyone have any clue why DXY is currently falling on my chart? That would be appreciated if anyone understood what this even means.
It depends on how well the matching function in the labor markets are working, because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at, I think when we got to 1-to-1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we'll be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too. It is to try to achieve it. So that's what we're doing. There are a range of opinions though, and that's only appropriate.
Steve Dorsey.
Thanks, Steve Dorsey, CBS. You mentioned earlier just now fading fiscal policy. Do you feel that the Fed has been supported enough from policies at the White House?
You are the expert, not me. If you go to YouTube to look for expert, I am not your expert. I'm your guide. I'm your friend. I'm your help. But you know what I'm going to do? I have already sold gold this week. I'm done with it. For those who didn't see the beginning of this video, I said, target's been hit. That should be like, what? What do you mean, bruh? What do you mean, bro? What do you mean, bro? Bearish is in, gold is in a bearish trend. Do you buy bearish trends? Some do, some don't. I don't. Well, so currently we are at 25. There's one meeting today. So we are currently at 75. So 75 currently, there's 75 one there. It's going down to 74, from 95 to 74. As you guys are pricing in, that is going to be dollar bearish. That is bearish for dollar. Bearish for dollar. The other thing that is also most important today is, I think I've said more. Fed says more than 200 basis points of more Fed tightening is priced in already in 2022, implying a Fed's fund rate at 2.9. I think that is too high. I think we will be at 2.5 by the end of the year. NASDAQ, boom, up to my target. I want price above 13,400. Maybe we should buy tomorrow. Maybe there's a bit of a trade plan in the Discord channel. I also saw during the stream, join the Discord and VIP. I am the one that does VIP webinars on Wednesday and Fridays. Fridays is going to be a kicker one. Every morning, I wake up with a dance. It's going to be great. And you know what? Why it's going to be great? It's because I take my time for you, myself. I love you, family. I love you, family. So right now, I would even say, okay, if this can continue, I would like to buy tomorrow's central pivot. For those who doesn't matter, for those who don't know what I'm talking about, it is pivot points. And if the pivot points can just show up, that would probably be better than nothing. Like 13.25 would be my buy price for tomorrow. My bias is bullish. I just needed to raise above here. If it doesn't go above here, I'm not going to buy. So I need to break above here, get it back down to 13,252, and I'm going to be a buyer. You're going to find that in Discord. You're going to find it in Discord. The other one was gold. The other one is gold. If I was a buyer, I would buy between 1878 and 1873. That is only based upon my trading strategy. That is not financial advice whatsoever, but I'm just going to say, I'm only saying what I would do. That is not your choices. I'm not telling you to do anything. Do your analysis. You do your own analysis. Be happy with it. You will lose. You will win. But in the end, we will still make money. That is the area that I would look to buy if I was a buyer. But I'm not going to, because I'm not. So, peace out.
Let's face it, if you're trading Forex without a winning trading plan, you're gambling. You need a model that is going to long-term net you a profit. Our team has put together a free guide on how you can actually create a trading plan.
All you have to do is use the link down below in the description.
Send the word template to our team on Telegram and we'll send you a copy. Again, hit the word template in your Telegram, send us a message and we'll get back to you with a copy of the free trading plan template.